Hi viewers, welcome to Manimantra TV. Today we are with Sihan Malu sir. Today's topic is house EMI. Is it saving or expensive? Many people are very confused about this sir. What can you tell about this?
See, what is happening is EMI can say cost of purchase, savings. When you are paying rent, it is expenditure. EMI should be not far higher than the rent. Suppose you are paying a rent of 25,000, the EMI can be at the most 40,000 or at the most 50,000. But EMI cannot be 75,000 or 1 lakh like that. It will be unbearable. So 25,000 expenditure, but EMI 75,000 maybe for your own house, but it will give a lot of financial stress. That is the most important way to consider. Immediate cash flow is EMI is immediate cash flow, and it is a monthly payment, and it will directly reduce the funds available. So this is the most dangerous thing. Generally, people feel, we'll buy a house, we'll stay there, we'll pay installments by reducing the rent. But what the rent you are paying, what installment you are paying, the most important, you have to verify that. I told you when you are paying the rent and you are going for installment of 75,000 to 1 lakh, it's very difficult to pay that. See, it may be your own house, but it should not cause financial mental stress also. That's the most important. And one more thing is interest cost. This EMI is only like a investment to purchase a house, but not as interest. You have taken a loan of 50 lakhs. Every month you are paying 50,000. Out of that, 40,000 is only interest, 10,000 towards principal. So you are paying only 10,000 towards principal. 40,000 going for interest. So you are paying interest only. So it should be, interest should be less, principal should be more. Of course, it will come after some time. But how long? How long can you bear that? Early years, the interest will come, but you have to see that the interest portion, how much interest portion is going, how much is going for principal amount. So if the principal amount is more, your loan will be reduced easily, early. But if the interest payment is more, the loan will be continued for longer period. So means you are paying interest. Otherwise, if that is the case, if interest is more, if the interest portion is more on the EMI, then you go for, instead of going for purchase of a house, you go for a other investment. Maybe shares or mutual fund, deposits, stocks or anything like that. But if the interest is less, then you go for purchase of a house. So it depends upon what is the cost of house, installment, and interest component of that installment. But the most important, they should not become a financial burden. If EMI is too high, it can strain your finances, limiting your ability to save for handle emergencies. Suppose the money is saved is less, no money is saved for financial emergencies or expenditure, it will give a lot of stress to not only individual but also entire family members. Nobody invites that. One should not feel that why did I purchase this house without money for sufficient financial choice? You should not feel like that. You should feel comfortable to stay in that house. For this purpose, what I say is, if you are going for a purchase of a land, you go with your own money. If only you have money, you go for land purchase, open plot. If you want to go for a flat or residential house, you see that at least 50%, your installment should not be more than 50% of your income. The most important thing. So if the income is 1 lakh and you are paying 60,000, 70,000 installment, it's very difficult. So for this purpose, what you should do is EMI installment should be less, 40 to 50% of the income. That is important. Of course, there is a risk that if the EMI builds a ownership of property, but the rent is only no ownership, but only just like staying purpose. But after some time, if the rent is less and the EMI is more, after some time, by reducing the gap between the EMI and rent, investing the gap in some other assets, maybe bonds or shares or deposits or anything like that, after some time, maybe 5 years, 6 years, you may be in a position to become the owner by paying at least 50% of the house. So there is a rumor that in future the rate may be increased, or we may not be able to purchase like that. There may be opinion. The only thing is we have to see our financials is important. House available, or luxury available, comfort available. Our strength is most important. Finance strength is most important to take a decision, purchase a house. That is depends upon the funds available with you. It should be like a forced saving, but it should not be forced burden, forced stress. It should be EMI should be forced saving, but not like a forced stress. And after the loan is repaid, it becomes you become the owner of the property. And one more thing, there are people say that there are tax benefits for that you can go for EMI or a house loan with that. But now that all the tax benefits have been withdrawn for deductions and they are enhanced the taxation limit itself. So all these are tax based saves tax based planning is not useful for house home owners. It everything depends upon the EMI and the rent. If the rent is more, you can go for EMI. If the EMI is more, you can go for rent. It depends upon your decision, and it depends upon. As I told you, EMI should not be more than at least 40 to 50% of the income. So if it is more, means it will financial stress will come, and also tenure of the loan. How long you can go for loan? 5 years, 6 years, 10 years, 20 years. Generally now the lenders are giving 35 years also. So is it required? You have to be, see after some time what may happen, children may come, children's education, marriage, functions, all this you have to require. So how long you can go on paying that? In my opinion, EMI should not be more than for 10 years. You have to repay the loan within 10 years. That should be the planning for purchasing a house. So, if anything is more than that, it will give lot of what we call any expenditure beyond that, new expenditure or emergencies may be affected. That is, for this purpose, EMI should not be more than 40 to 50% of the income. Property value may increase, but when you sell only the property will realize. If you don't sell, there is no property realization. So that is not the criteria. But sometimes we feel that it is better to go for purchase of a flat, purchase of a house and rent it. But it is very difficult. Rental, it is very difficult to get a tenant and who is pays rent promptly on time, and there is no without dispute. These three things are important. Tenant's activity, payment of rent, and disputes. So all these should be taken into consideration before going for EMI for purchase a house or staying in the rented house. EMI is a saving, rent is an expenditure. But when the EMI is saving is 1.5 times or 2 times only, it is better. But if the EMI is more than 4 times of the rent, it will give financial stress, financial indiscipline, I can say, anxiety, financial stress, all these will create problem. Of course, loan with competitive interest is the most important. And one thing is shorter period of loan. It cannot be more. It should not be more than 10 years, maximum 12 years. That is most important. And one more thing, verify, compare between the rent and installment, and how is going to influence financial position. I am not saying the valuation. You may get huge valuation in future, but what about the current position of financial position? That is most important. You may increase the value, but there is no income. What is the purpose of increasing the value? This is most important before taking a decision. The gap between the rent and EMI. If the EMI is double the rent, you can go for purchase of a house. If the EMI is more than the double of the rent, wait for some time and you increase your income, and then only you go for purchase of a house, EMI.